Hello, my name is Steve Bigelow with the Candlestick Forum. We could see there was a change of investor sentiment based upon the Morningstar signal in the Dow. And we've got a lot of people that always ask, can you use this for option trading? Using candlestick analysis in conjunction with whatever trading style you want to use is dramatically beneficial by knowing when to get into trades well before everybody else is getting into trades. For example, we could see the Morningstar signal that was different than this Morningstar signal here in the Dow. The difference was this Morningstar signal closed above the T line. This dramatically changed the probabilities of investor sentiment that the sideways downward drift was now changing because of the Morningstar signal, one of your 12 major candlestick reversal signals, which told us that if the market indexes were opening higher the next day, whether you were a stock trader or an option trader, especially an option trader, this allows you to get into positions with much more confidence, and you're buying those options when the premiums are not only the price is low, but the premiums are low. The investor sentiment hasn't built up in them. That same scenario over here, even though we did not have a reversal signal in the NASDAQ, we had positive trading. But the next day when they gapped it up above the T line, or the pre-market futures showed that the markets were going to open strong, that allowed you to go in with much more confidence versus where they were opening positive and still not getting up above the T line. Now there was positive trading and gapping up above the T line. This allows the option trader especially to get into positions with much more aggressiveness, knowing that their risk reward factor is going to be dramatically improved. So there were lots of bullish charts on what was it, yesterday. However, there's lots of charts that had bullish trading, but they weren't candlestick reversal signals. So the probability factor is much greater in your favor if you find the ones like our recommendation on Roku was based upon a Morningstar signal. Lots of boats are going to rise in a rising tide. We're looking for the ones that have the higher probabilities of rising a lot faster in that rising tide. So as an option price, notice what the investor sentiment was in these stocks for months. Very dismal, not a lot of premium built in. That means on the first signs of candlestick reversal signals, the candlestick investor has that advantage of getting in with much more confidence when the prices are still low and the premiums aren't built up yet, with the expectation that the probabilities of a reversal signal are going to produce good results. Now, there's always some good results based upon a non-reversal signal, but the probabilities are much greater in your favor when you see that reversal signal. So identifying what patterns are going to produce for us. We put out a special recommendation yesterday on HGEN based upon the classic setup, the fry pan bottom, then the pullback J-hook pattern, creating a classic pattern, meaning this wave right here and this wave right here are probably going to be the same magnitude, with making this move right here an extremely high probability trade setup. So if we can identify patterns and what we expect coming out of those patterns, that allows you to be buying at the optimal time. On a stock like MULN, we started recommending this. Look at our alert over here. This was on our kind of special recommendation setups. Then when it pulled back, look at your bullish engulfing signal above the T line. Bullish engulfing signal staying above the T line, gapping up. Today, they closed up above the 50. Now, should you be buying a stock that's already up 45%? The answer is, if we know what's coming out of a fry pan bottom, if this opens positive tomorrow, Everybody can see the fry pan bottom, but I'm sorry, let's put it this way. Candlestick investors can see the fry pan bottom. Everybody else is watching to see what it's doing at the 50. If it starts trading above the 50, there's so many investors that say, oh, I'm going to buy once it comes up to the 50. That's where they start coming in, confirming what we already know is a strong signal or pattern. So knowing that the probabilities on positive trading, especially at a level that everybody else is watching, is going to produce a high probability result. And that's exactly what was happening here on DGX, our recommendation. Look where it broke out from a fry pan bottom here at the 50. Where was the next likely target? The 200. If it breaks out from the 200, what do we got going on? A strong expected result coming out of a fry pan bottom, more than likely at least coming up to fill this gap. This allows the investor to either be buying stock or options immediately on positive trading, knowing the probabilities of that trade result. Anytime we can see a pattern where we know based upon human nature what the results are going to be, that puts you in a situation where you can be buying immediately expecting this type of move. Our recommendation on A6 was based upon this little bobble breakout, a J-hook pattern that occurs right at a resistance level that everybody else is observing. That allows us to be buying calls on ARRY, because now the expected result is much higher because of the bobble breakout. So this is what we call 2+2 analysis. All the elements that we can put into our visual analysis at a glance gives us a high probability expected results because of human nature working the same way time after time. Look at your best friend, a doji gap up through the resistance level, giving you a J-hook pattern bobble breakout. This is the expectation. You can see how it moved up nicely today. So we're pointing this out because this, again, I reiterate, this is not rocket science. This is just utilizing the information the Japanese rice traders have produced over hundreds of years, telling us where the force is coming in and also explaining to us what those signals and patterns represent, allowing us to be able to analyze a price move with the same degree of expectation as somebody that's been trading in the market for 50 years. So with that information, join us next Saturday and Sunday, a 2-day full day training where you learn the signals, the patterns, the top ranked signals and patterns, why they work effectively, the confirming indicators that dramatically improve the probabilities of them working, learning the entry strategies that greatly improve being in the correct trade at the correct time, when to take profits, how to utilize gaps with those candlestick signals, which greatly enhance the probabilities of strong returns, where to set your stops, and just simple scanning techniques to find these trades. Join us, because not only if you're, that's the wrong way to say it. If you're a stock trader, this information will greatly improve your ability to analyze when to be in good stock trades. An option trader greatly enhances when to be in an option trade where the risk reward factor is greatly in your favor. That'll be it. We'll see you in the chat rooms.